Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Sorry about the numbers down below there. You'll get that in there. We got a lot of economic news releases scheduled for today, so we'll jump right in there today. And we'll start off with the personal income for June. We had back in May 0.3% increase. We figured it increase up maybe up to 0.4 for June, and it jumped up to 0.5. So people are earning a little bit more, which is obviously a good sign. And then on the other spectrum, we got the consumer spending for June. So back in May, there was a decrease, so retraction of people spending. So it was like negative 0.1. We figured it would go up to 0.1% for June, so people start spending a little bit more. But basically, it was in between at zero. So no spending, but it wasn't, but slightly better than May, obviously. Core PCE. This is where you take the food and energy out. This is the Fed's favorite gauge for inflation, personal consumption expenditure. We have a 0.1 for May. We figured it would go up about 0.2 for June, and it did. So we came in at forecast. It's still pretty moderate for inflation. These aren't very high numbers, so that's a good sign. And then we got the employment cost index for June. We had a 0.4% for May, and we figured it'd go up a little bit for June, and it came in at forecast. So these are basically the cost of having an employee for corporations is what that index indicates. And then we have the Case-Shiller home prices for May. We had a 1.3% growth for April, and in May it jumped up to 2.2%. So that's obviously a pretty good number. And then we had the Chicago PMI, which is the manufacturing in the Chicago region, and as you can see the numbers right there, we had back in June 52.9. We figured it would drop a little bit, but we actually went up in July, so a good number there. So a little bit better numbers for July for manufacturing in the Chicago region. And then we have a little bit extended over on the other side here, consumer confidence for July, because we had quite a bit of news here. I didn't have enough room to fit on that page. So for consumer confidence in July, we had 62.7 for June, and we figured it was going to go down, and actually went up to 65.9. And obviously, the stock market's down a little bit right now, and a lot of that is due to some comments that were made out of Germany, which is kind of disrupting the market a little bit. But also, investors are kind of looking towards any actions by the European Central Bank on Thursday, as they've kind of said they're going to do everything they can to preserve the euro. And some comments were made by Holland and Merkel last week as well, saying that they're going to do whatever it takes to keep it unified. But most investors are feeling that the only thing that the European community is going to be able to do at this point is basically give up sovereignty and basically become more unified or disband, basically. So when the comments out of Germany were making it sound like they're without any concessions from other countries, they don't want to be the one country bailing everybody else out. That's what they're kind of hearing. So you're hearing some obviously some people who are kind of resisting that possibility. So, but most investors are kind of feeling for them to be able to do anything, they're going to have to basically give up sovereignty and basically become more unified as a whole versus individual sovereign countries within one union. So that's the feeling. So let's go ahead and jump over to the bond market and see what interest rates are doing today. We had a nice little rally yesterday. We were kind of closing up that gap that was left on Thursday to Friday. And then on top of that, today we are still kind of closing that gap up. So we are up about 12 basis points from yesterday, and down about 6. We're off just on top of the 10-day moving average. So the base of that gap that was left was basically being closed. This is going to be an important direction as to where we go. Hopefully we remain above the 10-day moving average and kind of shoot above to get better rates. As we said, we got a lot of important economic news releases scheduled for this week, and it could be some moves to one way or the other. As we can also kind of see with this 10-day moving average moving up, and then the ceiling here is going to be squeezed either going upwards or downwards. So it's going to be very important over the next day or two which direction we're going to see. And Thursday obviously will be very important for see what investors are looking at for the European central bankers. All right, but interest rates are a little bit better today as a result of yesterday's rally, and we did start off a little bit better this morning. We're still in the 106 range for the bond market. So interest rates are a little bit better today. Thanks for stopping by. Thanks for watching. Hope you guys have a wonderful day, and I will see you folks tomorrow.